It's the midweek edition of Business Morning here on Channels Television. Good morning and welcome to the program. I'm Ini Jodmekwa. Let's start off with business, and today, of course, we're starting with oil prices. It fell for a third straight session on Wednesday as investors fretted about a hit to fuel demand from growing risks of a global recession and tightening COVID-19 curbs in China. Brent crude futures fell 51 cents to $93.78 a barrel, while U.S. West Texas Intermediate crude futures was at $88.66 a barrel. That was down 69 cents. Both benchmarks fell 2% in the previous session, and the International Monetary Fund has cut its global growth forecast for 2023 and warned of increasing risk of global recession. But the IMF also urged central banks to keep up their fight against inflation, even as investors worry policymakers could trigger a sharp economic downturn by raising borrowing costs too fast and too high. And then we see what's happening in the commodity space. London cocoa futures on ice steadied on Tuesday, having climbed to their highest in nearly 2.5 years in the previous session, while sugar and coffee fell as the mood in global financial markets soared. March London cocoa slipped 0.1% to £1,926 a ton, and after it hit its highest since May 2020 on Monday, which was at £1,954. London cocoa has been gaining support as the British pound continues to head south, making sterling-priced cocoa cheaper for holders of other currencies. The market focus is also turning to European third quarter cocoa grind, which is due later on tomorrow. And back here in Nigeria, there's a Nigerian data and insights company, and we've been having members of staff from that organization on our show. Well, they have raised $3.3 million in a seed round backed by interesting Serena Williams investment company, and that, of course, got the attention of a lot of Nigerians. Well, we have the Chief Executive Officer now, Preston Ide, joining us to give us a bit of details about that. Hi, Mr. Ide, good morning.
Good morning.
Well, we have to say congratulations, $3.3 million. That's a lot of money. How did you get it? What did you tell Serena and the other firms?
Well, I think like any other Nigerian startup today, you pitch essentially the future of what you're building. And I think the data problem on the African continent, in Nigeria specifically, it's big, it's large. We've known that for a long time. And I think, going out there to actually solve that problem, make data available is something that's very valuable, especially to professional customers.
All right. So now that you have this much money, I know you outlined some of your plans. You want to open up in East and Southern Africa, get more staff, enlarge your course when it comes to data. But tell us, this is coming into the Nigerian economy. How do you hope to make a wider impact, apart from growing your company, which is Stairs?
Yeah, I think it's actually very simple because it's core to our business. At the end of the day, we see the data problem as something that actually affects capital flows into the African continent, because when you have more data, when people can better see the markets that they're investing in, when they better understand the trends, the transformations, right, the patterns, it makes it easier for them to make decisions about putting money, into one industry or one company or one sector, right? So we see our solutions as something that actually enables the investor community. And we're particularly focused on investors outside the continent who are looking from a sort of market entry perspective. So I do think that the underlying nature of Stairs is such that we provide the kind of data and insights that people who want to make decisions in African economies would need. And I think that really enables the rest of economic activity, because today many people would argue that, making more reliable business and financial data available would definitely contribute to improve capital flows and even reduce the cost of doing business on the continent.
Well, I guess as a country also, this is one of our little wins in spite of all the global headwinds, the inflation, and, all of that we're talking about. It shows that companies, especially startups in Nigeria, can still attract funding. And if you can attract $3.3 million, there must be something those investors are seeing in Nigeria that perhaps a lot of Nigerians cannot see.
Yes, I really think it's a simple thing. It's opportunity. I think what we're seeing with the tech ecosystem in Nigeria is that it is fast outpacing the rest of the economy. I think when you look at data going back, all the way to like 2017, you see the sort of telecoms and information sort of services space, which is our proxy for technology, just because of the way NBS records its data, has probably gone at least 10 times faster than the rest of the economy. So you have this dichotomy now between the digital economy, which is growing fast, attracting international investment, and the real economy, which of course has problems that most Nigerians are very familiar with. So I think that as Nigerians and the rest of the world continue to embrace this reality that our digital economy is really a core part of our future, right? We'll see more of these investments happening. But yeah, I really think it comes down to opportunity, particularly as it relates to digital economy.
And what are you guys doing as the startup so that this funding is sustainable? So we don't wake up one day and say, oh, there was a time in Nigeria when startups could attract millions of dollars. What are you guys who are at the fore at this time? What are you doing to make it sustainable?
Yeah, it's one word, really. It's growth, right? Continuous growth. We see that the kind of investors coming into Nigeria now, coming to Kenya, Egypt, South Africa, they're looking for growth, right? They see big markets, they see big opportunities, they see the opportunity to actually build really, really large companies, right? And I think it then puts, the onus on the founders to make sure that their companies are going to grow. And how do you grow? You create value for your users, you create value for your customers. So I think continuous investment in making our products better, in upskilling our teams, essentially creating more value for our customers. That really is the key to everything else. Definitely, we don't want a situation where we're looking back and saying, the heydays of the startup ecosystem. But I think that growth is really at the core of what investors are looking for, and it then rests on the startups and their teams to make sure that they continue to do that.
All right, Mr. Preston Nide, congratulations once again. But trust us, we'll be following up to ensure that STAIRS is doing better after getting $3.3 million. That's a lot of money. So we'll be following up to see that, you keep to your words there. Well, thank you so much. And certainly we'll be talking to Noel later in a couple of minutes, also from STAIRS. So we'll be enjoying part of that data that you give. Thanks.
All right, no problem. Thank you very much.
All right, so let's take a break now, a breather, and then we'll be back to have Noel Okwedi from STAIRS also. She'll be talking on the mini grid. And join us again after the break. This is Business Morning on Channels Television. Welcome back. You're still watching Business Morning on Channels Television. Now, Nigeria's electricity supply is always something interesting that will catch attention because 45% of Nigerians still don't have access to grid 8 years after privatization. While most of these unserved households dwell in rural areas, only 25% of rural households have access to the national grid. Urban electrification is equally unimpressive. I mean, was it last week or is it up to 2 weeks now? We had another collapse. That was the 7th or the 8th time. It seems that we're losing count for this year alone. Well, even those with access are underserved. 78% of Nigerians receive less than 12 hours of electricity daily. Now, we've heard of some development in that area, hoping that is going to improve electricity supply. One of it is there's a disco that now uses gas and supplies electricity to Ayobo community. But we're going to dwell on that and find out some of those mini-grid impacts and projects in that area. We have Noel Okwedi, Senior Energy Analyst with STAIRS. Hi, Noel. Good morning. Well, I think I should say congratulations, too. Just spoke to your CEO on your seed funding round, which was successful. Congratulations. And we hope to get more and larger data from you guys from now on.
Yes, thank you so much. Definitely, we definitely will.
All right, so tell us more about this gas-powered, interconnected mini-grid. Is it as complicated as it sounds, or is there a way to make it easier for us to understand?
Yeah, so it's pretty simple. So we know that the national grid, the one that you just referred to, that is always collapsing, is just made up of generation companies, transmission and distribution. The generation companies have generators that they pass through wires, through the transmission and distribution, and it gets to our houses. So mini grids are just are the same thing, really. There are generators that generate electricity through gas or solar, and then they pass through wires to people's homes. So that's essentially what a mini grid is. The difference is that a mini grid just has the capacity of 1 megawatt, which can power about roughly 8,000 homes, while the grid, as you know, is on a much larger scale that can power millions of homes. So yeah,
Okay.
it's pretty much the same thing.
All right, so a lot of us now do have alternative. So other than the generator, petrol or diesel generators that we have in our homes, we also have alternative with solar. Is this part of that mini grid you're referring to?
So no, so a mini grid can serve thousands of people, like I said, like at least 8,000 people, while there are other solar alternatives. So there are solar mini grids, but there are other solar devices like inverters, solar home systems. These are much smaller that can just serve like maybe one house, one residence, one office. But mini grids can serve thousands of people. So they're ideal for small communities in rural and now, like we're seeing, in urban areas as well.
So we know that one of the discos has already adopted this. Does it have to be a disco adopting it? Can maybe a private company adopt it and then maybe decide to serve and of course get paid? You know, maybe decide to choose a community and then have a mini grid, provide for that community and get paid?
Definitely, the possibilities are limitless. So the reason why this particular company has partnered with the disco is because the distribution company already has infrastructure in the area. So it doesn't make sense to construct your own infrastructure when there's existing infrastructure. So that's why they decided to partner with the disco. But there are mini grids in rural areas with no infrastructure. There are even mini grids in areas with infrastructure where private companies decide to build their own lines, plant their own transformers, and serve certain communities. So you don't have to partner with a disco, but in this case, it was easier and cheaper for the company.
So I know that the conversation around constitution amendment is kind of sleeping now, mostly because of elections and campaigns and stuff. But one of those areas that was proposed for amendment is the area of electricity, where there's supposed to be freedom now for state governments and, you know, maybe private sector participants to get into, because formerly, of course, there was a limit, even for states. You are not able to provide, I think, much more than a certain level of electricity to share or put in the grid. And the Constitution Amendment is supposed to deal with that. Do you see that bringing a change or boosting this mini grid platform that we're talking about?
So yes, definitely. I think that the amendment to the Constitution is key, but at the same time, I don't think that it was such a huge blocker for the states in the first place, because like we know, even the electricity sector, the national electricity sector with the discos, the main problem there is that people aren't paying, not that they can't. So there are lots of issues, but the major issue is just that the revenue problem, that the discos aren't making enough money to pay the transmission companies and even pay the generation companies. So that has like kept the power sector in limbo. But with the new, with states being able to have their own electricity boards and their own electricity regulatory systems, their own grids, it's a good development, but it will be good to see how they also solve this challenge of revenue and payments and just all these issues that have plagued the national grid. And yeah, so it would be good to see how they solve those challenges, but it's a welcome development. I guess that any avenue through which Nigerians can get electricity is a good one at this point.
But a lot of Nigerians, if you go out there to do a vox pop, you know, get the voice of the people, a lot of people seem to imply that the reluctance to pay is because there's no steady supply. So which one should come first, you know? So perhaps if Nigerians or maybe in a community, there's steady supply, revenue may not, I don't know for sure, may not, you know, because it's the same thing with paying of tax. People ask, okay, you want me to pay tax? What is it being used for? What is it going to be used for? who's held accountable and stuff like that. So perhaps if there's a steady supply, then Nigerians would not be reluctant to pay their tariff.
Yeah, so it's a classic chicken and egg situation. On the one hand, the distribution companies need money to buy meters for people to improve their infrastructure so that they can supply electricity. On the other hand, people also need electricity so that they can pay for it, because if you're not getting constant supply, then it just means that people are angry and they're less willing to pay. So we have two situations there, and both of them are impacting the other. Some solutions have been to get funding from the government or from private sector or other sources, since the power sector seems to be unable to generate revenue on its own. But those have been slow in implementation, and also because the power sector is still on the way to fully cost-reflective tariffs. So that just means that even private investors that might want to put their money in, because there's no path to profitability, they're a bit hesitant to do so. So yeah, the revenue problem is a big one, and the two issues. So on the one hand, the issue where people aren't paying, and the other hand, where people aren't getting electricity, they are both related, and they just keep feeding into one another, and it just creates a vicious cycle in the end.
Well, let's hope with more companies or more private sectors or even more discos embracing mini grid, and then we see electricity supply more, people will be more willing to pay, and then the circle will surround. Well, thank you so much, Noel Okwedi, Senior Energy Analyst with STAIRS.
Thank you.
All right. Power supply, always a major one, and we'll keep talking about it and hope as new plans and new innovations are being discovered and implemented, we'll bring it, and perhaps you will embrace one of it, and then you have one day, have 24 hours of electricity supply in your home. But now let's take a break. After the break, we'll head to AFEX Commodities space and find out what happened for the weekend at the 10th of October. Let's see you on the other side of the break. Yeah, welcome back. Well, we'll see more than 97% drop in the total turnover for the week ended October the 10th. And that's a summary of what happened on the AFEX Commodity Exchange. Joining us now with the details is Omotola Kongwe, Market Data and Research Analyst with AFEX. Hi, Omotola. Good morning. So give us the details of the market.
Hi, good morning. It's a pleasure to be here this morning. So across the last trading week, we saw a mixed performance across our key indicators. We saw a decline of 97.96% in our total turnover, moving from 0.49 billion naira to close at 0.01 billion naira. We also saw a decline of 91.35% in the total volume of contracts traded, declining from about 702,000 contracts to close at about 61,000 contracts. We, however, saw an increase in number of deals, increasing by 45.59% to close at 360 deals, moving from 261 deals. Our AFEX commodity index, however, closed flat to close the trading week at 455.71 basis points. We saw an increase of 1.87% in the AFEX export index, increasing from 189.65 points to close at 190 points. Across total volumes traded, we generally saw a decline across most of the commodities. However, we saw an increase in the volume of paddy rice traded and the volume of cashew traded. Across our prices, generally, prices closed flat on the exchange in the last trading week. For more information about our commodities, kindly visit our website at africaexchange.com, and to join our trading platform, you can download the COMEX app on Play Store or the iOS Store.
All right, Omotola Kongwe, thank you so much for giving us the details of trading on the exchange for the week ended October the 10th. But that's not all that has happened for the week in AFEX. We've been talking about flooding and the threats to food security AFEX is now also interested in that, and for them, in most cases, the crops are unrecoverable. We talked with Olam Agri yesterday, and we saw the devastation at that cost to their crops, between 15 and 20 million dollars. And this begs the question of how much impact flood has had, and will continue to have if nothing is done about it. Well, let's find out what AFEX thinks and what AFEX is doing about it. We have David Ibidapo, Associate Strategy and Corporate Finance with AFEX. Hi, David. Good morning. Thank you so much for your time this morning.
Hi, good morning. It's a pleasure to be here.
Good to have you. So, well, I don't know, but let me just ask, what's the impact of this disaster, flood that we've seen? From your perspective, we've seen the news, we've spoken to some smallholder farmers, we've spoken to the big one, Olam Agri, but tell us from AFEX perspective, how bad is the situation?
Yeah, thanks for that question. I think it's a very worrisome situation because the flooding case that we are seeing this time is one of the biggest flooding events that we've seen in a decade. And it's actually very devastating, especially for the fact that this is a period where we should be expecting harvest for a lot of commodities, right? Especially for rice. If you look at some major producing states of paddy rice in the country, they're actually all flooded. And I think you and I, even the common man on the streets, can actually is already feeling some of the impact. So we are looking at queues at filling stations as a result of flooding. Even just as a sidebar, right? Ordering something from an online store, and one of the messages they're sending is, okay, sorry, this will be delayed because of the flooding situation, right? So it's very devastating, and it's actually a very big issue for food security in Nigeria currently, right? So we are seeing about 164,000 hectares actually laid to waste, and about 40 billion naira from an estimate standpoint point of view, right? Wasted in investments, right? And so for paddy rice, in fact, before the flooding, our estimation for paddy rice production this year was about 12% decline year on year, and that's because we were seeing that a lot of farmers weren't going to be planting or cultivating paddy rice during the wet season, and a lot of them are more focused on the dry season plantation and harvest, right? But as a result of when we accounted for the flood situation, so we are looking at a 21% potential decline in the output for paddy rice this year, and that's really is something to be worried about because it's a major staple in the country.
Yeah, well, obviously something to be worried about because the forecast, we now have to reduce it now. Let's look at the way forward. For instance, innovation. You know, is there a way out of this? And what's AFEX doing about that?
Yeah, so I think it's very important for us to start looking at innovative solutions and not just focused on one aspect of the agricultural value chain, but more focused across all aspects of the agricultural value chain. Because the truth of the matter is, when we are talking about food security, while we are talking about increasing sporting production levels, right? We're also talking about storage. We're also talking about logistics. We're also talking about access to markets, which is more like it is an inclusive package, right? So while we are focused on food production, even as a private organization, right? One of the things I would also want to say is that there must be a synchronization, right, between the government and also private institutions also to like drive food security. And we're talking about innovative solutions around sporting production levels, right? Also storages, which is very low. If you look at the numbers, we can actually store about 5 to 7% of annual production in a year, right? And access to markets in terms of logistics, in terms of road networks and the likes, right? And also access to finance, most especially for the major stakeholders like the farmers and the processors. So I think we should start looking at the whole value chain entirely as to looking at just sporting production levels and probably trying to ameliorate the effect on prices.
Yeah, you talked about the need for collaboration between the private and the public sector. What, from your perspective, should the government be doing now in the area of infrastructure, in the area of policies? Because every year we talk about flood, every year we count our losses following the flood. What should be done, or what could be done to at least to reduce it, at least to an extent, to a manageable extent?
Yeah, so it boils down to, in my view, it boils down to increasing or heavily investing in infrastructures, right? Because if you look at one of the causes of the flooding this year, it's actually an overflowing, or the Cameroon dam, Lagdo dam, right, which the authorities of Cameroon actually opened to kind of shed off excess water, right? And this is meeting with excess rainfall in Nigeria. So a lot of states that are currently along the River Niger, River Benue coast, right, are actually largely affected, right? And if you go back to history, one of the conversations around that Cameroon dam was the fact that Nigeria, so there was an agreement between Cameroon and Nigeria that, okay, Nigeria would have to build a dam, Dancing Hausa dam in Adamawa State, which should be twice larger than the dam that the Cameroonians were going to build. And the whole essence will be to be able to absorb that excess water that is going to be released, and also be able to generate about 300 megawatts of electricity, and also be able to serve as irrigation to about 150,000 hectares of farmers, right? So that was the whole, but we have not actually completed that dam, and that's one of the effects that we're actually reeling from now. So it speaks to heavy investment in infrastructure, closing that infrastructure gap. So we need to be intentional about this. And also, because of our forecast for this year across commodities, especially for major staples like maize and paddy rice, which we are anticipating that maize is going to be falling by about 14% and paddy rice about 21%. We think there should be some immediate efforts from policymakers to kind of ameliorate from the production aspect and also from the price effect aspect, right? Because we think we should start thinking of building reserves across other grain commodities and not just focused on one commodity, and also strategically releasing these volumes into the market when it seems as if the supply is actually low in the market. Because at the end of the day, the effect is largely felt by the households. They feel the brunt more, and we are talking about higher inflationary pressure for the next season.
So do we say these suggestions, at least the one you're talking about, infrastructure and all that, can we accept our fate for this year and say we should start working towards next year, or can we still salvage something this year?
Yeah, so I think in terms of effect, yes, we will feel the effect, right? Because at least between the next 2 to 3 months, right, we will feel the effect, right? So one of the things we should start looking at is more about, okay, how do we kind of ameliorate the price pressure that we'll be building as a result of the losses that we are counting currently, right? And also, we have a dry season harvest planting season that should kick off between late January into late December into January, right? So I think a lot of focus should be around how do we motivate a lot of farmers to go into planting dry season paddy rice and getting more volumes from that, right? So we should be talking around things around input subsidy, right? And also how do we get irrigation, and how do we provide those infrastructure that farmers can leverage on to produce, right? Because if you look at between the next 2 to 3 months, which is typically we fall on our festive periods, right? There's always high demand for rice and other commodities, and we don't see any immediate fix to some of the challenges that we're currently facing, right? So it's a double issue for Nigeria. First of all, the key highlight for this year was the fact that the Russia-Ukraine crisis actually kind of spiked up fertilizer price levels, which caused a lot of farmers to reduce their fertilizer consumption. This is something we've seen across the years. Whenever fertilizer prices soars or increases like that, there's always a decline in fertilizer consumption in Nigeria, right? And that's one of our major forecast points, right, for production levels. And now we are talking about the floods. So we should be looking more into the medium to long term and see how we can ameliorate this issue. Because across commodities, we're already seeing food balances decline, and in some cases, the food deficit widening. So I think it's a major thing, and we need to start taking it serious. The political will has to be there, and also private organizations needs to also continue to intensify their efforts in promoting Nigeria's food security.
Yeah, thank you so much. We do hope the political will from the private and the public sector would meet at some point. Thank you so much, David Ibidakpo, Associate Strategy and Corporate Finance with AFEX. Thank you for sharing your thoughts with us. Let's take a breather. We're back for the markets. Coming out from AFEX market to the money market, and Will has proven to be a prophetess.
Good morning, Nini.
Morning, Will. You prophesied yesterday, and we saw the market follow your prophecy.
Yes.
You spoke to the elements.
Yes, today I saw the analysis,
the
technicals.
Oh.
You know, if the wheat was going down, I expected bargain hunting to start setting in, and it did. Boa Cement did that magic.
Yes.
We saw it soar over 8% yesterday, adding 4.5 to come up to his share price, and that was wonderful. The market boosted the market 0.45%.
So shall we start calling you prophetess?
No, that was just for yesterday.
Oh, okay.
I just had that epiphany for yesterday. Thank you so much. And now we're starting off with the bond market, where it's opened on a quiet note yesterday. But although halfway through trading session, we saw improved offers on the 7-year instrument, which is the 2031 paper there. And then it was offered at 14.05%, while the liquid 2037 paper was traded at 15.4% yesterday. Now, despite OMO maturity, we saw the Treasury bills market open on a quiet note as well. Participants were trading cautiously, and this sentiment, we saw that it persisted for most of the trading session yesterday, and that's largely, we saw that it was largely unchanged from opening levels. And analysts expect this quiet sentiment to persist in the near term, you know, though with some bearish undertone to it. But Caleb Alimi, fixed income dealer, FSDH Merchant Bank, has some details or more insight as to what's going to happen, especially with the NTB auction that's going to take place today. Good morning, Caleb.
Good morning, Will.
Now, we see that banks are like the major contributors, are the biggest buyers for bonds and institutional buyers for bonds in the fixed income space. They're big players there. But right now, it seems that they are struggling. They're still struggling, I can see, Caleb. And can you tell us why this is happening?
Okay, so banks are largely still recovering from the CRR debits, you know, that occurred after the MPC's pronouncement, where, you know, CRR increased from about 20 to 32 to a minimum of 32.5%. You know, that led to significant outflows from the system, and banks are still struggling with that. That's been the main reason why you've seen a very, very quiet market generally in the fixed income space. We expect that liquidity constraint to continue. As a matter of fact, market opened at about negative 146 billion yesterday, you know, and we haven't seen the figures for today, but we expect it to be same of the same. Banks are largely funding from the CBN window, so it's been a huge struggle currently. There's an NTB auction today, like you rightly mentioned, about.
So what are your expectations, Caleb? What side are you leaning towards for this NTB primary auction taking place today?
I mean, rates have to go higher. The last auction, the 1-year paper closed at 12%. We expect a minimum of 100 basis point hike in that rate today, at least a 13% or possibly 14%, you know, depending on how you know, the market actually goes in for that auction. But we expect at least the rate hike.
Okay. So what of the NTB auction? I mean, the NTB OMO maturity that rolled in. Do we expect an auction in the offing? I know that the CBN is going to hold an FX auction soon. Can you tell us about that?
No, so for the OMO maturities, it was paltry. Given where market is currently, it was largely a drop in the ocean. We did not feel any impact on the market. So we don't expect an OMO auction anytime soon until system liquidity, you know, generally improves. Okay. There is an FX auction this Friday, and it's going to be interesting how banks participate given their liquidity situation.
With the FX scarcity, you know, issue that we're having, we'll see how that plays out. Thank you so much, Caleb Alimi, fixed income dealer, fixed income dealer, FSDH Merchants Bank, for your insight.
Thank you, Will.
Program. Now, moving on to the domestic equities market, the market resumed yesterday after the public holiday, the Muslim public holiday. On a positive note, the all-share index rose by 0.45% to close at 47,565 points there. And though we're still at the 25 trillion naira mark, we're inching higher, closer to the 26 trillion naira mark, and hopefully we cross that particular level. Now, volume was down yesterday. We only saw an uptick in value and also deals. So 125, about 125 million units of shares traded yesterday. A value 1.9 billion naira and deals over 4,000 deals there. So Boa Cement was the trigger yesterday that pushed the market to the positive performance it closed with yesterday, closing with 4 naira 50 kobo added to its share price and over 8% for investors. Now, banking was up yesterday 0.65%. I'm wondering there was just 1 or 2 tier 1 banks that were up in yesterday's trading session. Most of them were down, but other tier 2 lenders, I'm sure, were able to pull that market up and that counter up. Now, consumer goods was down 0.1%. Industrial goods over 3% there, and I mentioned Boa Foods was responsible for that. Insurance up 0.24%. Oil and gas surplus was the biggest culprit here. It pulled the market back 2.41% back. And so we're hoping that positive sentiments persist in today's trading session. I'm not a prophetess. I'm not going to say the market's going to close positive, but I'm saying that the market is volatile and it's going to go which way. But I'm leaning towards the positive side. I'm leaning towards the positive.
Do I hear some terms of uncertainty and fear?
The market is an uncertain place.
Okay, Will, you have a minute. Look into the crystal ball, your crystal ball. Tell us how the market will close today.
Okay, Ini, I'm just going to see maybe marginal positive close for today. You know, seeing yesterday's bullish performance, the market's going to be like mixed reactions going to happen. I think that's what we're going to see.
Marginally positive.
Maybe marginally positive.
All right, we'll test your powers again. Thank you so much, Will. All right, so we'll take a break now. When we come back from that break, we'll head to London. Juliana is standing by to give us an update from what's happening in the UK. Welcome back. Let's head straight to our London studio now where Juliana is standing by. Juliana, good morning. I think we have a mixed blessing this morning. We see UK economy shrinks in August, but we also see the pound recovering a bit. So I don't know where we can lean to.
Good morning, Ini. Let's focus on GDP numbers, shall we? Because that's quite a significant piece of data released by the Office for National Statistics showing that the UK economy dipped 0.3% in August. This follows a rise of about 0.1% in July. This has taken market analysts by surprise because they were expecting it to be a kind of flat result, so no growth, but they weren't expecting it to dip. And I think now everybody's thinking that the recession that was predicted by the Bank of England and the Governor Andrew Bailey a couple of months ago will indeed be a reality. And there are so many reasons why. Of course, the main reason is the cost of living crisis, which we have been talking about for months and months and months, but it is beginning to bite. Because if you look at a closer look at the data, it is hitting all industries, all parts of the sector. So services is massive in this country because it contributes about 80% to GDP. So we're talking retail, we're talking hairdressers, hotels. They were just not seeing what they would expect to see in August, and particularly August being a high period of summer, lots of tourists in this country. It should have really been a time when the UK economy was able to bounce back. But it wasn't. But then if you have a look back in July, there were some significant sporting events, including the Women's World Cup. Most of that was held in the UK. Of course, there was triumph for the British female squad, well, the English female squad. And then we had Wimbledon too. So that brought in a lot of money. That didn't trickle its way into August. But there are fears about what kind of dip September will bring because, of course, we have that extra bank holiday for Her Majesty the Queen's death. 10 days of mourning. Lots of big businesses and big shops did adhere to the mourning period by closing and reducing their working hours. So it is going to be turbulent times. Now, if we go back to the Bank of England and their a third intervention on bond buying. We don't really know what exactly is going on until we have some concrete evidence from Andrew Bailey. He was speaking privately last night to some bankers, and it has been leaked. I think it was the Financial Times that are running with it, that he said he won't stop the intervention of the pension funds. Now, before that, we heard that he is going to be stopping the intervention, which is why we saw the pound sink just before markets closed yesterday. But then there were rumours that perhaps there will be an extended intervention. So we're not sure, but it's just not looking good. It's just one thing constantly after the other for Liz Truss's government. And there's an Economist article doing the rounds that has totally ripped Liz Truss's tenure to shreds. So she has got a lot to do, and she has to do it fast because, of course, you know, these aren't just numbers and data and scandalous headlines. This is the reality for people living in this country at the moment. It is incredibly difficult, and things need to change. Things need to change, Illy, for the better.
Juliana, they need to change, you know. As you were talking about Liz Truss, I was thinking of those campaigning to be president in Nigeria, and I'm thinking, I hope they're watching to see that these are not easy times for anyone to be in public office.
Absolutely.
There are lots of expectations, and you don't have a lot to work with.
Yes.
I mean, it's just the reality of the times.
I completely agree.
Yeah. So you
yes,
also
and
have
we need to make that more clear, don't we?
Yes, we have to. We try to do that. And just briefly now, before Ladi comes on, you have something about renewable energy in the UK?
Right, yes. Again, it's been such a short period for Liz Truss because there were 10 days of mourning. But remember that energy price freeze cap. Yes, £2,500. That was announced on the day the Queen had died. You can't just announce things in Parliament. Well, you can, but most things need to go for a vote. That's going to a vote today. But what the government have done is they've added another bill, which some are describing it as a windfall tax on renewable energy firms. And I know we don't have time, but it's quite important, so perhaps I'll be able to talk about it later with Ladi.
Yes.
But yeah, that's quite a significant piece of the proposal that has just been put in, and we'll see if it passes the vote, which it will.
Okay,
likely
all right.
do.
Ladi will have to take that so we can have him talk about the crypto. All right, Juliana, thank you so much. And remember that our assignment, we have to remind the politicians that there's a lot of work.
Oh, we do. We do. This is an important platform.
Yes.
We must use it wisely.
Exactly.
Thank you.
All right, Juliana, thank you. Ladi will certainly follow up on that conversation at 1:30 during Business Incorporated. But talking about Ladi, he has another cap to wear at this time. That's a crypto cap, Ladi. You see, two ladies had to make it really snappy for you to have the crypto.
Yeah.
So I hope you have good news for us from the crypto.
Well, you did mention not an easy time to be in public office, not an easy time to be a trader in this market. Also, you know, with all the IMF was forecasting yesterday.
I mean, we have IMF everywhere this morning.
It's all about the IMF right now.
Exactly.
Yeah. And we see the market has reacted to that. We see it's extreme fear today, 20 points deeper into extreme fear. We had extreme fear yesterday, but it's deeper today. Now, let's look at the market cap quickly now. We see it's $924.23 billion. That's up 0.39%. So we're seeing a bit of a pull-up there in the market this morning, even though there's a major fear in the market. $48.81 billion, that's volume traded, down 12.32% this morning. Let's bring in Amari Sachet now to discuss other matters happening in the market. Hello, Amari. Great to have you.
Hey, great to be here.
Yeah, so Amari, we did have that information come from PayPal that they were going to seize some of their user funds, about $2,500 worth, if they spread false information or misinformation, you know, with their platforms. And I'm wondering, how is that going to work? Even though they've refuted that, you know, now, how is it going to work? And what does it say about the decentralization narrative?
So first they refuted that, but keep in mind that they keep all the team and all the people that came up with, you know, those proposals and that put them out there. And so even though there is a backlash and they back it down, the same people are still at work there and they think that it's okay, right? So it's probably gonna come back in some form or another in the coming months. So how does that work? Well, basically PayPal decides that they can be judge and executioner here, and if they don't like what you have to say and they consider it to be misinformation, then they're gonna keep your money. And this is what this is the danger of custodian solution. As we have moved to more and more electronic payments, all life goes through custodian, right? So custodian meaning party that take ownership of our fund to move them back and forth. So PayPal is one of them, Visa, MasterCards, the banks, all those people, they're custodian of the payment. And well, that's a big problem, as we can see, right? Because as cash is disappearing, those custodians, they have less and less competition, and they can do pretty much whatever they want. And as a result, our money is not our money anymore, right? It's PayPal's money in some manner, right? Because if they don't want us to have it anymore, then, they just keep it, and that's the end of it. And this is why, personally, this is why I'm involved in the crypto space, because those decentralized chain, they have censorship resistance. They cannot, censor transaction in that way. There is no custodian that take ownership of the fund to move them back and forth. People are moving the fund from one party to the next right away. This is why we call them digital cash, because in that sense, it works just like cash. One party sends the money to another. And this is the way in the coming year, people are going to be able to keep their financial freedom. Without that, you basically have no financial freedom. All your transactions depend on the third party agreeing to, to process them.
Yeah, and but quickly now, we had that Binance chain, pause. That also happened. They had to pause their chain. And I'm wondering, is it safe if you can just pause a blockchain?
Well, there are different kind of blockchain. Maybe that's something people are not quite aware of, but some of the blockchain are decentralized, like Bitcoin and Litecoin and eCash, and and in that case, the founders or whoever work on the blockchain, they cannot pause it, they cannot decide what transaction goes through or not. And then you have chains that are not actually decentralized, right? They use a similar technology, but they use it in a different way. And Binance chain is one of those chains. So Binance chain is controlled by Binance. And if Binance decide to pause the chain, then they can, right? And recently they had a problem with the bridge, and it was costing them a lot of money. And so as a result, they decided to stop the processing on that bridge and stop the whole chain. Right. And anyone who had money on that chain, so their fund being frozen on there. So people need to be careful. It's not because it's a blockchain that it's decentralized and everything. There are blockchain that are, you know, such as, Bitcoin, Litecoin, Ethereum, eCash, for instance. Okay. And corporate chain, they use a similar technology, but in a different manner, and they are effectively under control of whoever operates the chain.
I guess it is the battle of the chains, Amari. Thank you so much. I'll catch you again next time.
Have a great day. Thank you.
You too. All right, so Ini, that's how it's looking in the market.
Battle of the chains.
Yeah, the battle of the chains right now.
Battle of the coins, battle of the currencies.
Exactly. So many battles.
Dollar winning, other currencies trying to catch up.
Crushing every other currency at this point.
It's a battle of life.
Exactly.
Thank you so much, Laddie. See you at 1:30, Business and Corporate. And you do have an unfinished conversation with Juliana.
Exactly. We'll get to that.
Sure. All right. Okay, so that's it on the program today. Thank you so much for being a part of it. Of course, Laddie will be back at 1:30, and that's a conversation with Juliana. They'll certainly try to complete it. And then I'll be back with you tonight for the stock market report, and then tomorrow at 10 a.m. we'll have another 55 minutes of business conversation here on Business Morning. Have a profitable business day. I'm Ini John McFarlane.